Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Katie Greifeld in for Caroline Hyde. We're counting you down to the closing bells here on this Monday afternoon. And here to take us beyond the bell, it's our global simulcast. Just because you're on the road doesn't mean the simulcast doesn't happen. Carol Massar and Tim Stenovec, we welcome our audiences across Bloomberg Television, Radio, as well as on YouTube. Guys, what have you been watching?
Wow, I'm just walking, just taking a look. Well, sorry, everybody's going by me. We're just keeping a watch on the markets coming off, the equity markets off their lows of the session. I'm not quite sure why we've seen a turnaround in investor sentiment, but we're not at our highs of the level, but we are green across the board here.
Yeah, at the lows of the day, the S&P 500 is down to 1.7%. At its highs of the day, higher by 0.9%. Equity investors today certainly can't make up their mind about which way they want to send the market.
Yeah, I think it's interesting. We talk about sort of going back into big correction territory here into the S&P 500. We're still there, but we're trying to come off of 11% close, Katie, to maybe just now about 10% off of some of the recent highs of a few months ago. Interesting, I know that we were talking earlier about that further bearish call of 4,800 here from Mike Wilson over at Morgan Stanley. At least for today, some of the enthusiasm comes back into the market.
He did warn about a bear market rally. Maybe we're seeing it today because, man, what a bounce back into the close. All those dip buyers, they came to party.
Yeah, and guys, one thing I was looking at, I don't know how much we've talked about this, but a lot of the technical levels that were breached a little bit earlier this morning, particularly with regards to the support on both the S&P and the NASDAQ, and I wonder how much that factored into some of the bounce that we're seeing into the close.
Yeah, you see that here as we count you down and go to some of the big major averages and some of the big close here. Romaine, I'll try to do my best impression of you, of course, as we wait for settlement and get some of the final numbers. I think for size and scope, it's really important to remember that Friday was one of the worst days that we haven't seen since really the pandemic, September of 2020. We're coming off one of the worst months of April, again, on Friday that we hadn't seen since 2008. And so a little bit today, of course, trying to climb out of it, but it has been a big hole that was April and a big hole, Carol, that we dug into. Just to round out the numbers, you have a Dow up 86 points to close here, up about 0.25%, and S&P up also about 24 points to just over about 0.5%, and a NASDAQ, the big outperformer here, you're closing up about 1.6% or so. And a Russell 2000, Carol, when we think about the big reflation, inflationary theme that is underway, those small cap stocks still managing to close up about 1% on the day.
Well, and you mentioned what's going on with the NASDAQ 100. We've had almost a 3% swing from peak to trough when it comes to technology stocks overall. And I find it interesting, Katie, that here we are in a higher rate environment, and we saw the tech stocks and the NASDAQ rally. That just doesn't make sense to me. It seems a little illogical.
It is fascinating, Carol. Pretty unintuitive. Again, talking about the 3% Treasury yield. To see tech really leading the rebound, who knows? But in any case, if you look under the surface at the sector level, it's interesting to see what actually is driving some of the movement today. Right up at the top, it's a great day for chips. You have semis leading the way, up nearly 4%. You also have auto and components up there. And too, energy and financials maybe as yields rise. But at the bottom of the pack, it's real estate, it's food and beverage, it's household products. We are in earnings season. Inflation is front and center, and you can see that in the sector breakdown as well, Taylor.
Yeah, I'm really glad that you mentioned yields. I know for our radio audience, typically, they're probably all confused. We usually go to the winners and the losers on the equity market basis. But you guys, there was so much movement in the bond market that's exactly where I had to go next. And Romaine, I think what is stunning to me is you have a 5-year at a 301, a 10-year at a 299, and a 30-year at a 305. So when you think about some of the flatness across the curve, it's really all right around that 3% level, at least on an intraday basis. The 10-year yield sort of topped that, really sort of highlighting sort of these key technical levels as we head into the big meeting on Wednesday.
Yeah, I don't think we can sort of forget about, of course, the big meeting that starts on Tuesday. And not only the announcement, but really the communication that we're going to get out of that press conference on Wednesday, particularly when you see what yields have already done in the open market, particularly when you see the sell-off that we've had, at least up through Friday, in the equity market, and whether maybe some of the heavy lifting has been done, and that gives Powell maybe a little bit more cover to be a little bit less aggressive than what the market had been fretting about.
That big Fed meeting to the Friday jobs report, and I'm curious to see what we see in terms of labor strength? Does that continue? I mean, when I talk to all of the CEOs today, one of the big things, one of the major concerns, again, is about talent. It's all about that and finding and making sure that you've got the people you need to do what they, to keep kind of the businesses going.
Yeah, Carol, you're getting ahead of me because I'm still thinking about the Fed and what happens on Wednesday and what we do hear from Fed Chair Jay Powell and to what extent the Fed has been looking at the volatility in the markets over the last month to determine what they're going to do next when it comes to interest rates, when it comes to the balance sheet, and then also just the way that they're going to communicate things. Because, look, I think this market does expect an aggressive Fed, but what happens if they get a less aggressive Jay Powell on Wednesday?
You know, Tim, I think it's interesting when you talk about sort of the communication. We continue to get communication from companies and the CEOs of those companies as we get another big week of some of the quarterly results. I want to bring you Expedia as we think about the big reopening trade and where
Oh, Taylor, I think we're having a problem with your mic, but we are looking at Expedia. It looks like the 1Q revenue did match estimates. That came in at $2.25 billion. The estimate, again, was $2.25 billion. They did have a one-quarter adjusted loss per share of 47 cents. The expected loss per share had been 43 cents, so a bit of a disappointment there. And if we look at the shares after hours, they're actually up a little bit, Romaine, up almost 5% at this moment. So clearly traders are parsing through this.
Yeah, parsing through this, and really, I mean, the travel story is going to be a really interesting one heading deeper into the year. Remember, there are a lot of folks that already say that we actually saw the travel rebound already. Remember, a lot of folks, particularly in some of those states that weren't sort of under as many restrictions, had already been out there flying and booking hotels, at least domestically here. We started to receive the return of international travel, and now the really big question is, when do we see a full return of some of that business travel? If that does come back in focus, I think maybe you'll see some of these companies right-size themselves. I can tell you, at least here on the ground, out at the Milken Conference here, international travel certainly picking back up.
I'm back, Romaine. I think the mic gods were mad that I cut you off. I thought it was just payback for all the times you cut me off, but my microphone is working as we continue to trickle through some of these quarterly
All right,
earnings
let's make
results.
sure it keeps working for Taylor.
Katie never interrupts me, Romaine.
Never. Wouldn't dream of it.
It's loud here, so if I keep interrupting you, just, forgive me.
Well, let me talk really loudly right now because we do have some more earnings.
Yeah.
Avis out with some huge numbers. I had to double check this, but if we look at the one quarter adjusted EPS, it was $9.99 a share. The estimate was for $3.26 a share. That is quite a beat. One quarter net revenue was $2.43 billion. The estimate, again, for $2.17 billion. And these shares are absolutely soaring after hours, up 11.6%. And coming into today, the shares were already up 35% year to date for Avis. Just some really huge numbers there.
Yeah, that's one of those headline crossers when it comes to Avis that you're like, wait, is that right? But that is a huge outperformance, and at least initially investors are reacting. I'm just going to go back to a big macro. Eric Schatzker was just joining us, and he talked about his conversation with Ken Griffin over at Citadel, and he said, period of highest uncertainty since 2008. Something like that, when I hear it, it makes me stop and just feel like we are in this really odd environment.
Well, it's so interesting, Carol. If he says that he's uncertain and he's seeing uncertainty, it's not necessarily the same thing that we're seeing from companies or hearing from companies about the strength of the American consumer. I mean, look at Avis just now. Ticker CAR, with the beat on the top line and the bottom line, obviously has some pricing power there, and obviously is seeing huge demand for travel. It reminds me of my conversation just a couple of weeks ago with Jefferies analyst Sheila Kayalu, who says that consumers are certainly shelling out for higher airfares, but they're also can't forget about the other costs that are going up when they do get to their destination, if they're leisure travelers. The car rentals, the lattes that they get, the hotel rooms, and how is that going to eat into their spending power?
Yeah, inflation. It's basically been all the talk here. I think what's interesting, though, is how many folks you speak to who say that inflation, while a concern, not necessarily an impediment, at least to them making money, and more importantly, I guess some of the opportunities out there that actually present themselves in a slightly less robust economy, particularly for those folks in the credit space.
And it does seem to be sort of a takeaway from the earnings season that we have seen thus far, especially from some of the retail names, that maybe we haven't reached the point where we start to see demand destruction, where when we think about all of these costs, these rising input costs, what's being passed on to the consumer, again, the consumer It's miserable, but we're still spending money.
We heard that from Poonam Goyal, of course, getting her reaction when it comes to Amazon pushing us forward, Carol, to Etsy, right, and some of the other Shopify. As you think about some of these other big consumer names, Expedia coming out and saying Omicron in the beginning of the year has totally faded. Huge demand has reached new highs since the start of COVID. So at least you're right. For now, consumers still spending in the face of that inflation.
And yet Amazon talking about that overspend of facilities and more amid some pullback when it comes to e-commerce. So something we're going to be watching. All right, folks, that's going to do it for our cross-platform coverage on radio, TV, and YouTube. We are counting you down to the close, of course, on this Monday. We'll see you again, same time, same place tomorrow.